Welcome to You and Your Money. I'm Jim Zahansky, Senior Managing Partner and Chief Strategist at WHZ Strategic Wealth Advisors. Let's dive into today's show.
Let's move on with our topic. Tell us about new tax opportunities available to business owners. What's the big win here?
Yeah, I mean, we've internally joked about this, the Big Beautiful Bill Act. We don't know if it's quite beautiful yet, but that's what it's called. I mean, the One Big Beautiful Bill Act is the actual congressional act name put forward by the Trump administration and passed by Congress. This is the largest sort of tax overhaul since the first Trump administration. And what's exciting, especially for your listeners who might be business owners, and I know you have a number of them, is that there are some larger tax changes that this legislation looks at and made some of these permanent, which gives some opportunity on the tax front. So if you're a business owner listening, it's a good time to take note because we're still in the 2025 tax year. You may want to talk to your accountant, see if you can take advantage of some of these if your business sort of relates to them.
So, and probably the big news is some of these things that were year to year will become permanent with this bill, right?
Yeah, and we'll touch on those. I mean, but there are some big tax opportunities. The first one is this, and this has sort of been going on since COVID and since the Tax Cut and Jobs Act of 2017. But now, the permanent 100% bonus depreciation for qualified property. So that's property that's sort of acquired after January 19th. So what does this mean? It means if you're a manufacturing company, or as an example, and you buy some new equipment that produces production lines, you're producing something, and you buy it after January 19th of 2025, and it costs you $100,000. It means that you can fully 100% depreciate that on your profit and loss statement in this year. Okay. And so, essentially it lowers your tax bill in a one-year basis as opposed to a multi-year basis.
All right, give me the second big win. What else do we have?
Yeah, this is what we call the supercharged QSBS benefits, which is the qualified small business stock change. So this also becomes permanent. Basically, if you're a C corporation, so this is a legal entity, right? You could be an S corp, an LLC. In this case, if you're a C corporation and you own stock in your small business, you can sell that stock and you can exclude the huge portion of your profit from federal taxes. This essentially says there's a holding period to it, though, right? So if you hold the stock for 3 years, you get a half of your profit sort of withheld from the tax. If you hold it for more than 5 years, there's zero tax paid. So, wow. This is a potential, if you're considering selling your business, you may want to talk to your accountant and your team that's helping you sell it and look at what is your legal structure and how do I consider how to reduce my tax base if I sell that. And I might change the legal structure considering this sort of situation if it's advantageous to you.
All right, what about the qualified business income deduction? Tell me about that.
Yeah, this was also a nice win in the original Tax Cut and Jobs Act of 2017, but essentially the qualified business income deduction, which is it's a major win because this becomes permanent.
Yeah.
It's a 20% deduction. It's now permanent, and so essentially if you're it also increased, but what this really does is if you have about $300,000 of qualified income, you can now deduct 20% of that, or $60,000. It becomes permanent, and that's an above the line deduction. So this is a reduction in your tax base, which is really nice.
What about research and development expenses, R&D?
Yeah, and these are ones that a lot of companies locally and business owners look at, right? We all have to innovate, right? So how do you innovate? And I think for this, these become immediately deductible again. Wow. And so, if you're in a company that is researching innovation or new ways and new methods to make something, build something, or, you're seeking patents on how to improve things, you should look at how to expense those, and they become immediately deductible once again.
What about businesses carrying significant debt for expansion or equipment?
Yeah, so this is this again. The permanently restored the more favorable EBITDA, so interest before taxes, depreciation, amortization. That's what EBITDA stands for. So they've restored this favorable treatment, versus just the EBIT, which is if you were if you were taking interest, deduction as a business, if you had some debt, right, and you were taking that just after taxes, you weren't able to take it before depreciation and amortization, which means in this case now under this method, which is a tricky accounting method that very few listeners will actually understand, but talk to your accountant about this because it's a nice way to reduce your or to be able to deduct higher interest costs.
Nice. What's the sixth benefit, the final benefit? Go ahead.
Well, the final one is if you're selling your business this year and you want to defer the capital gain on that, if you have a huge capital gain, you can essentially invest that capital gain in the opportunity zones that the federal government has. So Connecticut has a bunch of these. If you want to know what they are, go on to ct.gov. But these opportunity zone investments say you sell your business, you've got a $500,000 capital gain. Instead of paying that 20% gain or more on that tax, you can defer that tax into the opportunity zone investment, and then you can reset the basis on it over time. So essentially, it reduces your tax bill on that gain you took from selling your business.
So a lot of good news here, but a lot to coordinate. How do we do this? How do we pull this all together to come up with a plan?
It is a lot to coordinate, and most business owners don't. They're in the business.
Yeah.
They don't have time to think about these things. So they should have a good professional team helping them. If they're working with an advisor, make sure that they're a financial advisor. Make sure they're talking to them about this. How does it fit in their plan? And loop in their CPA. Who's filing the taxes, and how do you take advantage of this year? Because a lot of what we just talked about, Gary, is this year, starts this year, this tax year.
All right, sounds great.
For more information regarding wealth management and customized financial planning with WHZ Strategic Wealth Advisors, please visit WHZwealth.com. WHZ Strategic Wealth Advisors offer securities and advisory services through Commonwealth Financial Network, member FINRA SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut 06259, and 392A Merrow Road, Tolland, Connecticut 06084. They can be reached at 860-928-2341. WHZ Strategic Wealth. Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals while providing absolute confidence and unwavering partnership for life.